Namaste and welcome to Retail Investing. In this video, we are going to discuss two very popular IT stocks and we are going to analyze which stock is going to perform better and give us higher returns. The Indian IT sector is under quite a bit of stress. The Nifty IT index has corrected by more than 15% since February. The United States, which is the largest importer of Indian IT services, is going through economic troubles. Can a recession in the US devastate the Indian IT sector? And what is the future of TCS and INFOSYS? Let's find out. Before we talk about TCS and INFOSYS, we need to understand a few things about those companies or businesses which are clients of TCS and INFOSYS. When the COVID lockdowns began, the client companies of TCS and INFOSYS made it their top priority to create an environment supporting work from home. To achieve this, they started moving their processes and data to the cloud. This created a massive demand for IT services. TCS and INFOSYS, which are two of India's largest companies, followed a similar strategy since the beginning of the COVID pandemic in 2020. Both companies focused mainly on capacity expansion. This rapid expansion of operations required hiring a lot of new employees. Profitability was totally ignored. Within a few quarters, salaries in the IT sector skyrocketed and these companies were forced to increase prices of their services. When the lockdowns were gone, these client companies wanted their staff back in their offices. Spending on digital technologies was no longer a priority for these client companies and they reduced their IT spendings. To make situations worse, now we have a global economic slowdown which has further reduced demand for IT services. IT companies are struggling not only to maintain profit margins but also to increase their revenues. Foreign clients of major Indian IT companies are mainly from two sectors or verticals. Firstly, the communication sector, and secondly, the BFSI sector, which stands for banking, financial services, and insurance. The main reasons why IT companies are struggling to maintain profit margins are, firstly, high attrition rates and big hikes in salaries. About 60% costs of IT service companies are related to manpower. Costs related to manpower for top Indian IT companies have risen by approximately 20% in 2022-23 from the previous year. Revenues have not grown by 20% in that period. Secondly, due to the economic slowdown, their clients have temporarily stopped many projects which are discretionary in nature. TCS is forced to do on-site hirings, which is much more expensive than hiring employees in India. The BFSI sector brings in a major chunk of revenues for Indian IT companies. We all know there is a banking crisis going on in the United States, and as a result, Indian IT companies which has exposure to the BFSI sector are heavily impacted. The impact of TCS can be clearly seen in its quarterly results. This graph shows how TCS and INFOSYS have been struggling to maintain profit margins. Their operating margins have dropped below pre-COVID levels. Let's have a look at the situation of these two companies in more detail. In quarter 4, INFOSYS won deals worth $2 billion compared to $3.3 billion in quarter 3. TCS, on the other hand, won deals of $10 billion. TCS is going to close a huge deal worth $2.9 billion with BSNL in the first quarter of FY24. INFOSYS has a higher weightage in the Nifty 50 index at 6.68% compared to 4.31% for TCS. This higher weightage could mean bigger downside for INFOSYS in the short term because of the prevailing volatility in markets. Interestingly, mutual funds hold more of INFOSYS than TCS. As of March end, mutual funds held 16% of INFOSYS' share capital compared to 3.46% of TCS's. In the last 1 year, TCS has corrected by 12% and INFOSYS by 24%. INFOSYS' PE multiple is at a 23% discount to TCS's PE multiple. Even though TCS is trading at a premium compared to Infosys, TCS can generate better returns because it has a more diversified client base. The situation of Infosys is clearly more alarming than that of TCS. A lot of the company's projects have been unexpectedly cancelled by its clients. Infosys has several large projects in its pipeline. Even if the company wins all these projects, profitability will be low in the initial years. That's because large projects of this kind tend to have low profit margins in the initial years and improve later. This means the prospects of Infosys in the next couple of years are not that good. As per my understanding, there is a possibility of significant downside for Infosys. The stock could fall to even triple digits until any time in FY 2024. This could also mean a big opportunity for retail investors to accumulate the stock in SIP mode. However, I prefer TCS mainly because of its well-diversified client base, better networks, and a much bigger order book. At present levels, TCS is not trading at a cheap valuation by any means, but we need to remember it is far better to buy a great business at a premium than buying an okay business at a discount. Please share in the comment section what do you think about these two IT companies and their prospects in the near term. Thank you for watching the video and have a nice day.